Hello traders, it's Tuesday, July 1st, 2040. It's 8 a.m. Chicago time. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the overnight action. German May ILO employment came in at 21K versus 34K in April. German June unemployment change plus 9K versus consensus negative 10K, which is better. Unemployment rate unchanged at 6.7%. China June PMI manufacturing in line with expectations at 51.0. The Reserve Bank of Australia left rates unchanged at 2.5% as unanimously expected. And then the Ukrainian president, who is a pro-Western president, confirmed that the ceasefire has expired and has issued orders to restart military operations in the East Ukraine. He says he wants to liberate those areas. Not sure what liberate means. The U.S. is sending further 300 troops, including helicopters and drones, to Iraq to provide security and logistical support. So we can't help but get sucked into the thing. Looking ahead today, 8:45 Central, U.S. manufacturing PMI final expected at 57.5. At 9 o'clock, we have a slew of numbers just a half hour after the open. Construction spending at 0.5%, ISM manufacturing at 55.8, ISM prices paid at 60.0, and IBD tip economic optimism prior is 47.7. There's no consensus on IBD tip. It's a low importance number. At 10:30, we have a 4-week bill auction for $25 billion. I want to remind you that tomorrow, looking ahead, we have ADP employment, factory orders, we have Yellen at 10 a.m. Central Time, and crude oil. And then Thursday is a big day. We have the ECB rate decision at 6:45 Central, ECB's Draghi at 7:30 at the same time as unemployment, non-farm payrolls, initial claims, trade balance, and we also have PMI services, natty gas. A lot going on Thursday. Thursday, also as a reminder, is a half day. Markets close at 12 or 12:15 depending on the product. Same thing on Friday. The pits are closed on Friday, and so is the cash. German factory orders on Friday and retail PMI for the Eurozone. Let's take a quick look at what we did yesterday. So overall, just to look at the small range chart here, my trigger chart, very clean, very clear opening swing, push to 53.25, push down to 50.50. That's the low volume node that separates this upper distribution from this lower distribution in value. The market tested 50.50 to the tick, found buyers, came right back to 53.25. We have a weak high at the 53.25. One ticks it to rotate all the way back. So this is obviously an open auction. It is an open auction, meaning two-sided trading. There's no driver. There's not a higher time frame present. It's an open auction that's in range of the prior day, in range of Friday. So OAIR opening type. And on an OAIR opening type, the expectation is that either the higher time frame is going to step in after it consolidates and there's something to price in, or we have short time frame traders in here, day traders basically, clobbering each other. And for a while it traded in the same range. Numbers came out, pending home sales came out much better. Pop, the primary hypothesis yesterday was just that, to pull back a little bit, but to attack 55.50 and start pushing towards, said 58.75. That's where I was looking for it to push. I expected it to take out the 55.50 here, If you look at 50, if you draw a line across 55.50, right here you have multiple week tops, and then an LVN from the sell-off day, and then we're back up there. So we broke through the 55.50, expected a retest of 58.75, got to 56.75, 2 points short, and then we basically pulled back into the range, multiple attempts to push higher, and then we finally one tick the low to 50.25 with a failed auction on the close. Found buyers, and if you look back on my Twitter feed, twitter.com/futurestrader71, you'll see that I had said that this is a clear failed auction, expecting higher overnight, and that's what we got. We went higher to 58.25. We have an overnight low of 53.5, currently trading 57.50, and the overnight session shows a weak low. Mostly balanced profile. The point of control has shifted a shift up. So the point of control has shifted up, still inside of Friday's range in the upper distribution, but overall we have a shift up in price action, in value, and point of control. Left behind a normal variation day, higher highs, higher lows. Okay, so the trend up is resuming in the short term. Intermediate and long have been steady bulls. Let's look at the overnight to see if we can glean anything from it, and the answer is we don't. The overnight session opened completely sideways through the Asian session and started to drift up with the European session. I forgot to mention UK PMI came out fairly strong, pushing the British pound up. It left behind a weak low here at 53.50, but the market slowly drifted upwards, and we have what is a bulky, boxy profile, higher point of control, but approximately 1/2 of the expected volume. Less than 5 points of range so far. It is pushing. It's making an approach on that 1960 and 59.75 top. So remember, I said there was a double top up here at the high, 59.75 on the 22nd, and 1960 on the 24th. And we're coming right back up to it. So we have almost like a sort of a cup and handle type of formation with a pivot at 1960. So that's where we're headed with the overnight. Everything looks bullish so far. I want to go over the longer term levels. You might want to note these, you might not. But these are pulled off of composites and measured moves, the long-term charts. From top to bottom, I'm looking at 1979 as a double measured move target. Beneath there at 67.50, 68, I have a double measured move target. That's the next target up, 1968. And then from there, I have minor resistance at 58.75, which is this high volume node right here. 53 is a key high volume node in this area. It is the MC point of control. See how much volume there is at the 53 right here. This is the area we've been battling now for a couple of days. Beneath there, 50.50 is an LVN. It's the other side of the point of control. 47.75 is the next peak, the next acceptance. 44.25 is the next LVN. 37.75 is the next LVN. I'm not too concerned about this double-pronged high volume node. 37.75 is the next area down. 22.75 is the next cutoff, very blunt area, and it's the other side of this balance zone here, 22.75, and the key area below is 1675 right down here. We still have a gap. I want to remind you, we still have a gap here at from 96.25 up to 92. We have an untested gap, so no volume on the profile. Those are the long-term levels that I have for the ES. Primary hypothesis for today is for it to open out of range, out of value, for a quick test, responsive selling test lower, probably into the 56, 55, 50 area. If it cannot find a buyer at that point, I expect it to push through value and to start working its way back to 52.25. I expect this to get stuck here. We do have some numbers. If you recall, we have numbers at 8:45 and 9 o'clock, so 15 minutes and a half hour into the session. 9 o'clock is heavy on the numbers, so I expect us to pull back and chop in into yesterday's range, and then find, if we find a base, then I expect us to go through the 58.25 and push new highs, 1960, to target what I had mentioned before, 67.50, 68. That's a primary hypothesis, which is in line with the intermediate, long, and short-term trend. It's just a question of what the extent is of the test lower, responsive selling into the prior day's range. Remember, 53.50 has a weak low overnight, but there wasn't much volume, so I'm not sure how valid that is. The alternative is, of course, opening out of range, trying to be responsive on a shallow test, and then driving towards 1960. Being as we are near highs, sellers will start to get nervous and start to cover. So this is what I'm looking at as the two key hypotheses. The additional headline risk is continuing to be Iraq. And then again, I remind you that to take it easy the first half hour of trading, it is much better to let the market set the tone for the session, find out what the opening type is so you can determine to some degree who is in control. It's so important for you, in my opinion, to always keep a pulse on who is in control, because that tells you if you should be fading moves, or if you should be buying pullbacks or selling pullbacks. Understanding who's in control is really important, and the ways you tell who's in control is how does it open, what is the opening type, who steps into the market early. Once that's over with, what kind of volume do you have? Is our volume in line? What areas have we tested? Meaning, what have we done? What are we trying to do? How good of a job are the buyers doing in pushing prices higher and searching for sellers? And how good of a job are the sellers doing in finding buyers? So knowing those things allows you to align yourself with the market and have a better chance of being in the zone as you take on your trades. And then the rest of the game is really the good old boring kind of waiting for it to align itself with one of your hypotheses or plans, and then to, without hesitation, take a trade with defined risk and let the market tell you what it wants to do. Otherwise, this is an exercise in frustration, and you just get chopped around and overtrade and so on and so forth. Okay, so that's all I have for you. Stage 5 traders, we'll have a pop quiz out this afternoon. It'll be due Thursday at noon again. We'll go over it Thursday afternoon. We won't have a webinar on Friday. We'll have it on Thursday instead. So look for that. So the market's going to close at 12:15. We'll have a webinar probably at 12:15, and it'll be a short one so you can start your weekend holiday. Thanks for joining, and I'll talk to you all soon. Take care.